Hi, welcome to my channel. Today I want to share with you my updated analysis of Mercado Libre after they reported fourth quarter and fiscal year 2021 results a couple of days ago on the 23rd of February after hours. I have done a report on December of Mercado Libre, and today I want to update that projections and fair value based on the information that we received today from the company. If you see, the price after they reported jumped almost 10% after hours, and that's because the report was quite good and it exceeded expectations, so Wall Street was quite pleased. So I want to incorporate that new information into my projections and see whether that affects my fair value and IRR or my view of the company overall. The financial highlights that they presented were net revenues 7.1 billion, an increase of 77.9%, commerce revenues 81%, and fintech revenues 72% growth. So all these figures are really good. Gross margin at similar levels than 2020. Operating margin double, 300 basis points improvement. Operating cash flow was weaker, 18% down from the levels of 2020. Forex losses of 57 million due mainly to the Argentine Forex regulations, and the net income came at 83 million, quite a good number here. In this slide we can see a summary of some of the metrics of the business. Unique active users grew 5.3%, gross merchandise volume 35%, numbers of successful items sold 41%, total payment volume 55%, total volume of payments on marketplace 37%. So all these are very high numbers, even though this unique active users is not as high as the rest. It's coming from a very high number here in 2020, and the good thing is that the engagement of each of these users is growing as well, as we will see. In this table we can see the off-platform payments growing at 67% from the previous year, and this has grown at 75% on the fourth quarter. So this off-platform payments is the total payment volume less those payments that are taking place within Mercado Pago, Mercado Libre, within the marketplace. It shows the service that the company is offering is enticing even for people that is not purchasing anything in Mercado Libre, which is really good. And also here, if you see gross merchandise volume versus the total payment volume is 97%. So that means that 97% of the gross merchandise volume is paid with some of the offerings of the company. So this is great, and it's increasing from 95% the previous year. Some recent revenue growth trends per quarter, and you see that all the numbers are really high. 51% in Brazil, 47% in Argentina, 92% in Mexico on a US dollar revenue growth quarter year to year. And if you see this on a local currency, that means without the effect of devaluation, which is quite high, especially in Brazil and Argentina, you see that the numbers are even higher. So this company is growing really fast. Some notes from the earnings transcript. In terms of customer engagement, they say that our clients are buying more with us. On average, items per buyer were up 17% on a year-on-year basis, growing from a strong 2020 baseline. And they say that this engagement and improving behavior is due to the free shipping programs that delivers approximately 80% of gross merchandise volume on their network at no cost to buyers, and more than 2/3 of the gross merchandise volume is coming from organic, non-paid traffic, mostly through our app, cementing our position as a pull rather than push business. So this is great news. And comments regarding the logistic network, they are saying that they are decreasing the average delivery times and simultaneously lowering the shipping costs per order, and almost 90% of the volume was delivered through the managed logistic networks, compared to 77% penetration in 2020. And the efficiencies in delivery times has also been significant. 80% of the volume was delivered within 48 hours, and 60% of the volume delivered within the same or next day from the purchase date. So these are all great news. The company is getting more efficient, and the network effect that the company has is attracting customers, attracting buyers, and feeding into that loop with great services, and not only in the e-commerce but also in solutions for payments, solutions for lending, and advertising as well. So if we go to the free cash flow, which is something that it was a little bit softer, I think that the main reason here is these two lines here, which are credit cards receivable and other means of payment, and amounts payable due to credit and debit card transactions. So this was, if you see the combined effect of these two lines, was 750 million negative here and 500 million negative here. So it was a 250 impact, let's say, on this year. Could be the difference here, but I don't think that this is anything to worry. I think that it's due to the growth of the company. So we have to monitor this, but I think it's transitory. There's one thing here that I note is that the bad debt charges has gone up almost 3.5 times, and this of course could be a problem, but they explained that in the transcripts, and they said that our credit books bad provisions, which are booked under the sales and marketing expenses, have increased compared to the fourth quarter of last year due to our expanded credit origination. So this is the reason. And they go on and say that while this adds pressure, the incremental revenues from credit businesses more than offset the bad debt charge. So it's mainly due to the growth of the business, in essence, or the credit origination. The projections assumptions I'm going to make on the income statements, these assumptions are similar to the ones I made in the previous video, that I'm going to leave a link here for you to check if you want. And they are gross merchandise volume growth averaging more than 20% on a compounded annual growth rate between 2021 and 2031. This should be helped by first-party sales, which is approaching a low 20% penetration versus 45% in Amazon, for example. Take rate of 16% by 2031, and this is lower than the 18% that other analysts are assuming. Total payment volume reaching 350 billion by 2030 and 550 billion by 2031. Monetization of 3.3%, which is lower than the 5 to 7% that I've seen other analysts are assuming. 2031 gross margins of 43%, which is the same as in 2021, and operating margins of 20%. So these are my assumptions, and this is what the income statement is going to look like. If you see here, this top part is the actuals, and this is my projections. When I make the projections of revenue for Mercado Libre, the important number to me is this one, which is, of course, the one that's going to lead to the EBITDA that's going to be used for valuation purposes. But the way I calculate this number is the following. I based my revenue projections in the gross merchandise volume growth that I just mentioned, 20% on a compounded annual growth rate, and the total payment volume, which is 550 billion, or a 21.7% on a compounded annual growth rate. So with these two numbers, and then the take rates for e-commerce and the monetization on Mercado Pago that I mentioned, with these figures I get the commerce revenue for 2031 and the fintech revenue for 2031, and I come with the 2031 total revenue, which should be the one I'm using in the projections. And as I mentioned, this 3.3 is a conservative number based on what I've seen others are assuming, and also this 16 is conservative, so I'm using the lower number here, and that's why my revenue projection will lead to almost 47 billion. Then gross profit margin 43% and operating margin 20. And with that, I come with the EBITDA 11.7 billion, which is the one I'm going to use for valuation purposes. And then to the cash flow statement, I don't make much changes on the growth, but I'm using the base of a lower number. In my previous assumptions, this number was a bit larger. It was 1.4 billion, what I was assuming. But now with the 965, of course, the operating cash flow is going to be lower. And before, it was December 2030, 4.8 billion compared to December 2030, 2.9 billion now. So now I'm assuming a much lower number for free cash flow. All based on this decrease on the free cash flow here, so I'm going to base all the projections on a lower number. The growth rate, I'm assuming the same, but I'm increasing this a little bit because I think that this is just temporary. So it's going to increase a little bit more here, but then I'm going to taper to 15 as before. Okay, so with that, let's go to the fair value and IRR. These are the two numbers that I showed you in EBITDA and free cash flow for December 2031. The ratios I haven't changed. I'm using the same ratios, and they are explained in the previous video of December 2021 if you want to check. We get this enterprise value with this debt, we get this market cap. Weighted average stocks outstanding, I leave it at 50, and with that I calculate the price for each of these variables and I get the average. Then with this price, as of the 22nd of February, I assume that I purchased the stock at this price. Then I have the free cash flow per share adjusted and the selling price of 3.4, my calculation, in 2031. This cash flow for the investor will give this IRR. Buying at this price, a 16.41% IRR. So if you want to reduce this to 10%, you can increase the price to 1,500, which would be the new fair value to me in this case. So the price to fair value is 0.6, so it's a 40% margin of safety given all these calculations that I've made now. And if we compare that with the previous analysis I did in December, back then the price was 1,132, and the fair value that I calculated then was similar to today, well, roughly the same. But the price to fair value was 0.72, so it was a 28% margin of safety, and now we have a 41% margin of safety. So today, even though the fair value is a little bit lower, we have the price that has dropped so much that it's providing a much larger safety, let's say, for investing in this company. So then you have to ask yourself how much you trust these projections, especially in a world that just now, as I was filming this video, the Wall Street Journal published that Russia attacks Ukraine, and of course the market is going to open 4%, 3% lower. Mercado Libre probably is going to open much lower than that, because it's a company that is very volatile to the slightest news of, the slightest risks perceived by the market. But you may ask me whether I would change anything of what I just uploaded in this video due to this new information, let's say. And my answer is no. I don't know how to change anything in my projections based on something happening in Ukraine. I don't know the implications, and I cannot measure that. I only know that a company like Mercado Libre is going to be affected, probably, especially in the stock price, but I don't know in the business itself, how is it going to be affected in the short term or in the near term, and it probably will be affected. But in the long term, 10 years, which is what I am projecting here, I'm sure that the company is going to be somewhat in the same position that I am projecting. Probably a bit better, probably a bit worse, but close to that. So probably I am wrong, but this is the way I normally invest. I try to concentrate on the value of the company. Normally the good companies and with competitive advantages, which is where I base my investments, are companies that will get better or even thrive in situations like this one, or what we had with the virus, or any situation, inflation, interest rates, everything that you can throw to them. They are going to be better prepared than small companies. So that's why when you invest in a company that has high competitive advantages, you have a better probability of being successful. Now, of course, maybe I'm not making 16%, which is what my calculations show, but probably 15%, 13%, even 10% would be a good investment, I think, to make if things don't go as well as my projections show. So with that, I just want to summarize that this is a great company with an ecosystem of reinforcing services. It has Mercado Pagos, it has Mercado Envíos, Mercado Clicks, so different businesses that reinforce with each other and attracts buyers, and buyers attract sellers. So it has this network effect that I like so much. Revenue growth has been really strong, and on the back of a huge gross merchandise volume growth as well. Shipping is getting better and cheaper. They are managing to be more efficient in that front. The engagement of the users is also growing, which is good. There's a little pressure in free cash flow, as we saw, and but I think that this is temporary. Operating margins are improving, and one risk that, aside from the one just mentioned from Ukraine and the interest rates and all that, which are going to be there all the time, is the fact that doing business in Latin America is not that easy. It's they have inflation, they have devaluation, they have relatively low income customers, lots of controls, especially in countries like Argentina. And so doing business in those countries is a risk, of course, and probably you want to ask for a higher, let's say, internal rate of return before investing in companies like this. But overall, I think Mercado Libre will withstand most of the bad news that are thrown to them, because it's a company that has shown that in the last 10, 15 years it's grown and it's improved so much that I think we have 20 years of at least good return on investment capital for this company. So that's all. That's my take at the calculation of a fair value for Mercado Libre in these interesting times. I hope that you like this video. If you do, please give it a like, and don't forget to subscribe if you haven't done so. Thanks very much for watching. I'll see you probably in a week's time with another valuation video. Thanks very much. Bye bye.